Hey, it's Todd, Ault, and these are Wall Street words. Today's word is Sarbanes-Oxley Act of 2002. This is important legislation that followed the collapse of Enron. If you don't know what happened with Enron, Enron collapsed because of an accounting scandal. Effectively, the rule changes were pretty dramatic. It made CEOs and CFOs personally liable, and they could go to prison for false statements when they signed the audit reports. There's also changes in terms of corporate responsibility. It was a dramatic and sweeping act that changed the way public companies report, put an enormous burden on these companies' ability to report. There have been certain exemptions for smaller companies, but effectively SOX, which is what its nickname is in force, and it helps protect investors from fraudulent accounting activities and other behaviors by public companies. The word today is Sarbanes-Oxley. Giving you my perspective on Sarbanes-Oxley and being involved in many corporate boards and being the CEO of a public company, it's an important piece of legislation. Probably a little bit more than we needed, but Congress tends to swim the pendulum to one side or another. After the Enron scandal and the WorldCom scandal, it was probably going to happen anyways. It is important. Fortunately, Congress has amended it a little bit, made life a little easier. But for big public companies, it's a real big expense. Some public companies spend as much as $5 million a year just to comply with Sarbanes-Oxley. That's my perspective. Today's word is Sarbanes-Oxley Act. Hey, thanks for watching Wall Street Words. New words and terms delivered every single day. Please subscribe, push the bell. If you found this information helpful or you think someone could benefit from this information, please share this video. Thanks for watching our channel. Always good things happening here.